Okay, so hello to you all. Today I'm going to post a special stream version. Instead of making the usual analysis, I'm going to make it as well, but I'm going to speak more about my premium products, in this case the Ethereum versions and the altcoins versions. Hello GNOME. And at the same time, I'm going to provide, the details about the latest update which I made inside of it. And at the same time, I made multiple changes inside of the logic, so that at the same time you can also try to make more manual trades, with it, combined together, of course, with other tools like the one tool to rule them all, or a panel indicator that I'm going to show at the continuation. Hello, Christos. So yeah, let's go first to it. So initially, I'm going to use here a notepad because I want you to understand what actually I've been doing. So initially, we had trading index, and this trading index, or better said, yeah, we can say index, like I said, in general goes to -1 to 1, and in this case this -1 represents, like, for example, 100% of short, and to 1 which represents 100% of long indication. So in this case, as you may know, if you are one of the either, it doesn't matter if you are going to use my manual approach or my premium products or my fee products, I am always, and I will always going to be, I am a trend trader. Yeah, it appears, mate. So it works. So in this case, like I said, I am a trend trader. What does it mean? For me, if the market goes up or down, it doesn't matter if it go long or short, I'm going to enter into the trades. The problem that a trend trader has in general is the side market. Hello, Marena, and I'm going to speak after about the side markets as well. So in this case, like I said, we have this trading index, and this trading index, when you want to have a good strategy, you are going to combine multiple, and like I said, the lessons that I am providing right now, it doesn't matter if you are using my products or not, you can also use them and apply these lessons, in making your own strategy. So in this case, in my opinion, a good strategy will need a trend, direction, plus volume, plus an oscillator, plus volatility, plus price action or patterns. Hello, Leandro. So in this case, a good strategy, it has to be full, and you have to have everything. You cannot just trend, you cannot just trade using, for example, a moving average, or you cannot just trade using an RSI. I'm not telling that you cannot make money, because in the end, you guys may already know from my previous streams that it doesn't matter, the strategy that you have. As long as you have a good psychology and a good risk management, you are going to be profitable. Even if you are going to use, the typical coin toss, you have a 50% chance, in order to continue to be profitable. And as long as you are going to combine that with a good risk management, you can also make profit. But that's not the thing about here, and I'm always trying, to push you to have always something better. So in this case, like I said, a good strategy will want to have, all this part of this. And in this case, what I did, I took, for example, 200 moving averages. I took, for example, 10 types of volumes. I took as well, 50 types of oscillators. I took as well, I think 5 volatilities. And as well, I think I have around 20 patterns, for the price action. And if you are going to look inside my strategies, like for example, if you go in my profile, you will go, for example, in my scripts, you can find, for example, the candlestick patterns that I have. You can find one of the moving averages that I have. You can have, for example, so if you are going to look more and more, all these tools which I am putting here, I slowly, develop them separately. Maybe not all of them. Hello, Eftamini. Maybe not all of them, but most of them, you can find them inside my strategies. So yeah. So what I did, so these tools, they are for free, and you can make your own strategy. Yes, I believe there is a sound. If you don't hear me, I believe it must be an issue made with your device. But if somebody else, like for example AS good morning as well. If somebody else can confirm that they can hear, you can yeah, so you see there is a sound. So yeah, if you are going to look inside of it, I'm not going to continue right now. You can see that I have hundreds of indicators, and in any of those, you are going to find part of these ones that I have here. But yeah, anyway, let's go back. Let's go back, to what I was telling. So in this case, the good strategy, like I said, is going to have this one. So the good strategy is going to be. So in this case, what I did with our own ones, I try to make, the best use of all of them. So why just use one when we can use all of those, So I made, for example, here an index, I made here an index, here an index, here an index, and another here an index. And this index, for example, if you go inside the strategy, is going to be this one. So if you go here, like for example, you see rating for entry and rating for exit. This is telling that 35% of everything that I have is telling me to go long. And in general, this is kind of normal, because in general the markets tend to be more bullish than they are bearish. That's a proven fact, and not from now, it's from the beginning of the market. Like if you take, for example, Dow Jones or SP 500, you can see that for the last look, actually, I'm going to show you, because this way you are going to see it even better. Today I'm telling you, today is going to be a full educational stream, so it might take some time, until we reach all of this, but I want to show you, and I want to, to get you, from the deep of all these analysis that I am doing and everything. So let's go, like I said, let's go SP 500 and SP 500, well, SPX, actually, is the XPX. So let's look, for example, let's look monthly. And look at the monthly. We have the data since 1990. So it's 100. We have more than 100 years of data, and you can see that overall, over the last 100 year plus, we were in a strong bullish market. And this is, for example, one of them. Look, for example, at Dow Jones. Let's take a look at Dow Jones. Well, this one, for example, because we don't have the data, and I don't know how to say it, but I don't know. Let's look at NDX instead, Nasdaq. It's more recent. Look, Nasdaq, for example, is since 1986. And you can see that as well. It's in a strong bullish market. Look, another one. Let's take, for example, the entire crypto that we have. So you can see the entire crypto, yes, we have some ups and downs. But overall, since the last 7 years, we've been in a too bullish market. So all this doesn't matter. When you trade stocks or commodities, that's another way, because there is the supply and demand, and because of that, price is going to be more in a channel. Except, for example, for the dollar, which tends to be in general kind of going low. But you can see you have always ups and downs. So you have, you will always have an ups and down, so you'll always have a side market. I will cover as well Matic in the future, but today it's more like an advanced educational stream. I want people, to learn some new lessons in order how to apply them in their manual trading or automatic as well, in order how to succeed. Doesn't matter, the condition of the market that you have in front of you. So you see, for example, the Forex, it's overall, it's a side market trend. Look, for example, GBP USD, the same stuff. You see, so more or less it's kind of side market. If you go USD Japanese, you are also going to see, side market. So you see, it's not always fully trend defined. Hello, Mohammed. So once again, if we go back to BTC, like if you are going to look at the entire BTC, but not Bitcoin futures, but for example, the crypto cap, you can see we have a strong bullish market, Thank you, mate. I hope for you the same. So yeah, I hope you kind of understood, why am I telling that in general, the moving average, and not just the moving average, but the rating itself. I'm always looking, for a rating of, in this case, for example, like I said, smaller than the rating for the short. And you can see why this is proved, so if you look at all these markets, like I showed you previously, like one more time, the SPX and all of this, you can see why. Market tends to be overall in a strong bullish market, I do not have time, need to go to bed. Yes, mate, don't worry, I'm going to save this stream, and you can just go inside my profile, and you will have the vote there available. So you can watch it whenever you want. And I kind of always save all my videos. And if you cannot find it there, you can also find it in my YouTube channel, which can be found, as well inside my profile. So you don't have to worry about this. So yeah, I can't, I just can't. So in this case, I'm repeating. Now I hope you guys understood why am I telling that you need in general a less confirmation to go bullish than to go bearish. So yeah, with this more or less I kind of follow I kind of confirm the values that I have been putting here. And it doesn't matter, for example, which indicators you are going to take and which markets you are going to take. You will always have a smaller value for the entry than the short. Anyway, let's move on. Let's move on with the second option. So, like I said, this is going to be in general applied for when we have a trend strategy. But sometimes, unfortunately, like for example, it's happening now, you're going to see a side market. And the definition of a side market is that you will take 2 points in this space. So like for example, these 2 points, I'm going to put them, like for example, 2.1 or maybe 2.2, and the other one is going to be 3000. So if I'm going to put like this, and but not from here. We will start from here, from the beginning, and you can see this is going to be our trend channel. And the other one is going to be this one. So this is going to be our main channel. But then we have a secondary channel. I don't know how to make it smaller, but anyway, I'm going to put it like this. So you can see that the secondary channel is going to be this one. And the above, you can see that it's going to be this one. So we have the main channel, and the main channel, you can see in this case, it goes more or less from 3000 to 1.8,000, which have been, the lowest points in the last, in the last sessions, in the last months. Yeah, because I believe if you look into it, it was, for example, this place, yeah, in the last 2 months, in April was as well. So yeah. So yeah, you can actually kind of start from here, if you want as well. But you see this place, this support and resistance was in April as well, and it can serve you kind of like for the smaller one. So yeah, for example, in this one, for the up one, and you are going to tell me, yeah, but in general, kind of how you should put this, this support and resistances. It's very easy. You take the chart, naked chart. In general, I recommend 1 hour, but if you want, you can go with 4 hours as well. With 4 hours it's going to be the same, and it's going to be even easier, and after that you transition, and you always look at the highs and at the lows, but you are going to look at some points which are going to kind of be in the same position ever. So if you notice that if I put this barrier here, you can see that I have been attacked once in this place, 2, and then I have another 3rd attempt. So then, for example, you can go in 1 hour, and you can see what I was trying to say. So you can see we had all these attacks in this case, and the same one, for the short. You can see we have been attacked here. It was another attempt here, and then another attempt here. However, it didn't went towards it, So that means it was not enough power. But in general, in this case, the upper part, the resistance part, kind of serve as a better, confirmation. And then, from my calculation, because I started to look around the internet, and I started to look into it, and I was asking, people and stuff like that. And in general, for side mark, what do you need? Except, excluding the support and resistance. So what other tool you can use, for example, in this case, that can help you with the support and resistance? So in this case, do you need a trend direction? Like for example, a moving average? No, because the moving average, for example, if you are going to take it and if you are going to be able to understand it, like for example, you see it's going to be like flat, like let's take a moving average. Normal one, and you can see in this case, let's put a bigger value, let's put 50, and in this case you can see it's not flat, you will have a side market, but it's not flat. You know, it's still trying to have, you know, some certain directions, because it's all always look for a trend. And let's look, for example, at another one at 100, and you can see same stuff. We have here a little bit of flat, but overall it always have a curvature, and because it has this curve, you know, you cannot say that it's flat entirely. So because of this, you know, nope, they're not going to help you. Then, for example, you will have the volume. Like, but then, for example, when you look at the volume, let's go take volume. You can take, for example, volume oscillator. It's not going to tell you so much. It's going to tell you that if it's going up or down. And this is, for example, one of them. Let's take, for example, no, the typical volume that, yeah, the normal volume that we have here. So let's put into it, for example, I think it's here, and I will try to add one indicator, and we can add inside of it moving average, the basic one. But yeah, I don't know why it doesn't allow me right now to put it, but yeah, doesn't matter anyway. But you can see in this case on the volume, it's not going to tell you anything. You are always going to have buying or selling, you know. So in this case, neither. If you are just going to use it alone by itself, it's not going to help you either. Volatility, let's take a look in the volatility. And for volatility, for example, you can just write volatility, and you can use RVI. Well, that's going to tell you. This one, for example, is not going to help at all. So instead, for example, what you can use is ATR, average true range. And if we are going to use ATR, you can see, for example, that the values here have been bigger, and after that they start to be lower and lower. So because of this, you know, because of this going lower and lower, you can kind of tend to say, yeah, but this as well, if you don't have a moving average into it, like maybe if you are going to put an MA into it, maybe not, but still, this one, it depends. This one, the volatility, it depends. So we have only one group left. In that case, it's going to be the oscillators. So this is going to be our key indicators for a side market. And in case of indicators, what are they mostly trying to do? So let's go. So an oscillator, in general, they always tend to look for the overbought and oversold conditions. So they are always kind of trying to tell you when it's going to be a reversal, or yeah, in general, they are trying to tell you on a reversal. And the most common one, yes, is going to be the RSI, the rate of change, and stuff like that. So in this case, what I found out is that if you take, for example, an RSI here, let's take a normal RSI, if I can find it. And let's go for 80 and 20. So in this case, you can see that since we started this trend, it kind of mostly tends to cross it up, down, up, down, up, down, up, down, up, down. But instead, when you have a trend, but yeah, maybe in this case, when you have a trend, you can see that it's always going to cross the bigger barrier. In this case, the 80. Or when you have a sell, it's going to cross the 20. But in this case, what it does is it's always going to stay within a range. So let's say, for example, that range, let's make it smaller. Let's make it 70 with 30. You can see that, yeah, we might have some points. So this would be, for example, 1, 2, 3, 4 points. But if you compare, for example, when you have trending, you can see that we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You know, so in general, when you have a trend, you are always going to see these upper and down levels that they are going to be crossed more and more over. Yeah, but no, I am just trying to give you the bigger pictures, because in this case, just by using this one, it's also useless. Like I repeat here, mate. You know, you don't want just to look at one of them, but instead you want to make a combination of multiples of those. So in this case, for example, the key for the indicators, RSI is going to be 1. Another one, which I believe is going to be one of the best as well, is going to be rock. So let's take a look, for example, at rock. So you can see in general, when you have a trend, let's go, for example, with a value of 6. But yeah, maybe in this case, you know, when I apply it on the strategy, it's helping much better. But here as well, you can see that we cross and we stay mostly around, you know, around the middle point. And the values that we have, you know, they are higher. You mean here? Yeah, true, you are right, yeah. Now it can be seen better here, right? Sure, you can see it's more above and more down. While here it's up, down, up, down, up, down, up, down. True, true. Yeah. So one of those is going to be the RSI that I'm saying. Rate of change as well, but it's a little bit harder to interpret. In my case, for example, I am doing some formulas inside of the logic of the calculation. So better I'm not going to use it, because I'm trying right now to be more like teaching you how to find those stuffs. And then I'm going to speak about the other one as well. And then the other one that we have is going to be the ADX. But instead of, in case of ADX, what I'm looking for is going to be the ADX only. So, but how do I use it actually? Because now it's a little bit weird. Because but this is ADI. And we still have the values. Honestly, right now I'm kind of a little bit in the middle, because I don't know how to put this for study, taking into consideration what I do for, you know, for automations. Because in this case, the value that I'm looking for, the line, in order to look for this, is going to be 20. So I'm looking for the 20 line, which is going to be here. And if you want to have a defined trend, you can see that we have multiple crosses. But yeah, it might be, yeah, because it's also not being adapted and so on. But in this case, if you take ADX values, you can see that in general, if you want to have a big trend, you will look for the values above superior to 25. But better if you go even for 50. So in this case, in case of ATH, you can see that above 50, we only have. So if, let me make a copy, because this fucking shit is making me angry without having a line. But I don't know, can I put a line into it right now? No, I cannot. Give me one moment, please. Because I don't have a line inside of it and it's making me angry. H line, so for example 25, and H line 50. Just by having them to help a little bit. So you see, you can see in this case, yeah, we kind of hit it here. Yeah, we hit it here, but it's kind of course, it's going to have some false positive as well. You cannot expect to be always, 100% accurate, because that's illogical. But if you look in the past, if you look, for example, here, you can see we had, well, the big trend, it started here, 1, maybe 40, it would be a bigger value. Yeah, I believe 40 it would be a better value than 25. Maybe 50 is too much. But like I said, this requires optimization as well. In my case, for the automation, I am looking at 44 value. So you can see in this case, if you are looking at this entire side market since we started, it's telling us that we have a trend only once, and unfortunately this one immediately went after down, telling us that actually it was, it was fake in this case. But if you look in the past, you can see, for example, 1, 2, 3, 4, 5, 6, 7, again, because we crossed 9, 10, 11, 12. So in this period, if I'm going to take only this period, it's going to be more or less the equivalent of what we have right now, more or less 3 weeks, 1 month. You can see that when you have a trend, you have much more confirmation from both ADX, and I don't have the RSI right now. I don't know what the fuck happened with RSI, it disappeared. So, yeah. So you can see in this case, the margin tend to stay more above when we have this trend, and again it tends to stay more down, but you don't have so many crosses so often like we have here. Well, we do have, but you can see they are small. But instead here it's reversals. So you see we enter and then we go down, and then we enter and then we go down, and then we enter and then we go down. So these stuffs, they are showing you that, this side market is fully defined. So yeah. So one of the tools, like I said, you can look into the internet for more rules about this one. Like for example, look for 50 level area. Let's take out rock for now, unfortunately. For ATX, you can look for 25, 40 plus levels for trend. And then you can use as well ATR by looking on the movements that are happening. But this is a little bit more advanced, it requires a little bit of automation. Those, these are the tools that when you have a side market, these are the tools that in general are going to help you. So yeah, at the same time, of course, well, I'm not going to enter fully into these details, but you should go on the internet, you go on Google and you'll use side market RSI, for example, and I don't know how to properly use it, or ADX sideways, so you can you can look into all these videos and stuff like that, and you can hypogate, don't worry. So you can find this type of information, how to properly use it. There are a lot of tutorials. I'm giving you the basics, and yeah. Actually, one of the tools that can also help you with this, I just released it right now, and you can find it. I'm going to put you here the link. Give me a moment. I will place. I forgot actually about this one. These tools can also help you a little bit, and it's for free. It's available for everyone with a link. So there you have it. Actually I can share. So unfortunately, because I can share it on the YouTube. Looks like on YouTube it lets me. But because of this, what you can do, go inside my Telegram group, and you can take it from the Telegram or from the Discord at the same time. So with this tool, what it does, I'm taking like a combination of of these oscillators and averages and stuff like that, and it's telling you more or less in which direction it goes. And if you are going to see this value of the natural is going to be kind of bigger than the sell or the buy, then you kind of can expect that you have a side market. At the same time, it can help you to see the trend from one direction to another. But yeah, anyway, for this one, I strongly suggest you to go in the Telegram group or the Discord, and you can take it from there, because for some reason it doesn't allow me to publish a link in the chat. And also I keep it private, so I don't put it. Yeah, no, I cannot put the link in the chat. It doesn't allow me, unfortunately. So yeah. One of the tools. So more or less, now that we kinda understood, what are the tools that we should use and do against the side market. Let me remove this one. There are other stuffs that you can do for the side market. So we spoke initially, you know, about the volumes and about the support and resistance, but actually, how other ways you can find the support and resistance? Most of you, and when I say most of you, I literally mean like all of you, because I would say 99% of you are doing this. When you are looking at the chart, and now please answer me honestly this. When you are looking, for example, at ATH, and you want to make a proper analysis, you are looking at the ATH corresponding to your broker, correct? So like for example, you have Bitcoin or ATH on Binance, you are always going to use Binance ATH chart. If you have on Kraken, you are using Binance Kraken. But now my question for you, how many of you are actually using the volume of ATH from the entire market capital? And please be honest with me with this one here. And I'm going to explain you why I'm speaking about this one. Looks like nobody is answering. Anyway, okay, sure. So in this case, what I'm trying to tell you is that if you go on crypto and you take, for example, doesn't matter which one, let's take for example Bitcoin itself. But maybe if I'm going, look, for example, we have some honest guy. Thank you for being honest. So no, it's not that you are advanced. It's that literally nobody do it, you know, because they don't even thought about it. So they only think that they should use the chart that they have, but that's not true. Why is this? Okay, yeah, you are looking at the combine. Sure. Okay, nice. Okay, I look at the volume on the scrapper strategy. Okay. It's something. Now let's speak and now let me make you understand what I am thinking of, what I am telling about. So you see, when you take for example a chart itself, you'll always have a different price. Like for example here you have 36,400, 36,300, 36. Do we have any 500? Yeah, 36,38, 36,36, and anyway, if I will take another one, if I will take for example ATH USD. You can see that in case of USD, you'll always have this divergence, 2.5, 2.5, 2.15, 16. But yeah, maybe in this case, not such a big difference. But in some cases, like look, BitBay, for example, is 2.43. So yeah, this one is going to be a big difference. But instead of doing this, when you want to make a proper analyze, you know, of the how it's called, of the market, instead of using the chart itself or the broker that you have, instead of doing that, you can just write ATH and you can take the market cap. And if you are going to take this part and you are going to combine it and you are going to put here, for example, where the fuck disappeared my stuffs? Oh, wait a moment, because for some reason it looked like it disappeared the strategies that I had. Ah, there we go. Here they are. Yeah. There we go. I was like, what the fuck? I don't want to disappear. So, yeah, save. So, yeah, like I said, we look ATH. And if you look at the chart, we see now we have ATH. And if I'm looking here, for example, ATH USD on the Coinbase, you can see that the graphics, they are highly correlated. And as a matter of fact, better I'm going to do it directly on the chart. So if I'll put here and I'll compare to ATH USD and ATH, so ATH USDT and another one, ATH USD, but from Kraken, for example. There we go. So you can see that overall they are highly correlated. They are highly correlated. However, in some occasion, that small difference that you have there of 1% or 2%, like for example, you can see here at the end, it's kind of telling you. So you see, we have 6.64, the other one has 6.71, the other one has 6.74, and so on. Yeah, most of the times they are also going to be on the same values. But there are some cases because of some big flows or some big movements, and suddenly you know you're going to have big differences in the spike. And because of this, one broker or another might have a delay or might be faster than that. So instead of doing this, what I always recommend when you are doing a manual approach, instead of doing that, go and play with the volume. Because here in the volume, you are taking all the volume that you have from all the markets, and the candles are going to be the same. Yes, you are not going to have the same prices, of course, because you are here, you are having the total volume value. You are not having the price of the asset value, the unitary price. But the candles, you can see that they are kind of the same. But for example, this one can save you a lot of time in the analysis. It can help you even better, you know, to make that analysis of the, how it's called, of the support and the resistance and so on, because it's going to be much easier to do it, for example, here with this one and take into calculation this part from the volume itself than by doing it, you know, with the, but yeah, you can do it with the other one as well. But I'm telling you, if you want to be a truly professional, if you want to take into account all of it, it would be much better, you know, to do it with this one. So yeah, this is going to be one of them. And at the same time, like I told you, you have two ways to do that. And those two ways, like I said, you can do it either with you know, you're looking at the highest highs and the lowest lows, which have been attacked multiple and multiple times. And then after that, if you want to truly confirm it, you can look at order book. I don't know, there are some. In general, I use the order book from the Binance because it has the bigger volume among them all, you know. But if you want to use another one, feel free to use another one. But honestly, you know, when you start to understand this, like when you start to understand this part, you don't even need this, because you just by looking from here, you can understand that actually the, you know, the support and resistance are going to be like this part, you know, or in this part or this part, and you are going to see them reflected here as well. So you can see in this case the latest resistance that we have is at 2.6, but actually I believe the bigger one is going to be at 2.8. So yeah, or 2.9. Yeah, 2.9. It would be the second one. So, but it needs some time to actualize. But yeah, for this, you know, maybe you can use another, I don't know. You can use a total value of all of this, but yeah, it needs a little bit of time to load all of it, I believe. But honestly, you see, like I said, 2.9 is going to be the highest point. Because how do I know this? Because it's going to be this part from here. And yeah, maybe it's a little bit weird to see it with this one, but if I will put 88 USD, then you can see that the highest point is going to be here, 2.9, and it's being reflected here as well. So the other one, like I said, the other one may be 2.1, 2.2, the biggest buy powers. Look at 2.1, not so big, but 2.2 is the highest one of them all, you know. So just by looking at the chart, and you can see this movement have been for the last 3 weeks, and you can see in this case these parts never change, neither this one, neither this one. So yeah, that's kind of how you would get the support and resistance. And now that we have the support and resistance established, now let's go one more time, and you can see in this case, for example, 2.8. It's actually even bigger. It changed because it was initially here. So it was initially on 2.9, but you can see that right now it's here. So it's kind of here right now. But yeah, anyway, you should go for 2.9 better. Anyway, if you want to go 2.8, maybe from taking from here, you can also do that. Yeah, of course. But now let's go to some of these lessons that I am telling you. So, you know, look at this. We need no indicator because we already, but if you want to use the indicator for the side market, I told you previously, you know, you would have these ones. And let's continue and paint one more time, you know, those stuffs. So we established that we have this. Fucking hell. Yeah, more or less. If it's not fucking horizontal, yeah, it is what it is. And then let's go with this one, because this is what we have and what you saw that we have in the order book. So, how would you actually make use of this money when you have a side market. So you can see we have a channel, and in this case the channel go from 2.2, let's say 2.1 and 2.9. So in this case, fucking hell, fuck this one, yeah. Right. So in this case, let's say that you would have this point touch. You will do nothing because you got no idea, but you will touch it. So you will touch it 1, you will touch it 2, but then you will see that the third time we try an attempt. So you see we have 1 day, the end of the day, and then the next day we try again, and we can see that we have a line. We have this line in the, wow, so fucking ugly. We can see that we have this line in the lower, in the higher highs. So because we had this line in the higher highs, at this point you should be able to sell already. This is going to be a good confirmation for you to sell. And in this case, where should have been your entry? Well, in this case, like for example, if you would use my product, let's use my product. You can see that in this case the entry would have been at 14 hours. Ah, okay. Thank you. So you can see our entry would have been here. So we would have this of profit if you would go manually. So in this case you would have a 15% profit. However, my bot, what it did instead, you can see it exit here. So it exit much lower, and because it exit much lower, it only made, I believe, 7% or so. But by using this analysis, which I am telling you in this case, it would be, you know, very fucking easy. And now again, I'm not going to look at the entry that we have. I'm going to tell you one more time. Look, we have another entry here. We see that we start to attack it, and then again on the second part you can see that it's going to be lower and lower. So then again I'm going to only to take these higher highs. Fucking hell, man. And we can see in this case immediately after that it started to decline. So at the same time you can see that in the next candle here it would have been your exit. And now let's see where it would have been the entry. So you can see the entry, it would have been on 31 on 31 and 9 hours. So our entry would have been here. And you can see in this case you would have again this opportunity. And at the same time, if you would have had the 15 minutes, this part from here, if you would have used, for example, one tool, you would have seen it as well. So actually let's make a demonstration of this. So if you would go with ATH USDT, and we will go instead 15 minutes or 30, let's go 30, I don't fucking care. And so this date, as you can see, it was 31/24. So you see, if you would be with this one, it will give you this one. But if you will go with 15, you can have false. I'm not going to tell you are not going to have false. I would be fucking lying. You are going to have false entries as well. That's fucking normal. You can see, for example, this one, it would have been here. And this one, for example, you can see it would be high here. But maybe if you want to avoid of these false entries, you can see that if you would end with the 30 minutes, it would have been easier. But you can see in this case, the exit would have been on 28 May. The exit would have been here. This. But still, if you would analyze, it would still have been much better than just by using the you know. You see, it would have been much better. Like, you will still save a 5%, I think, here. That you could do it. The bot itself, you can still, it will still give you a profit. But if you'd follow these rules, it would have been even better. Now I'm going to be fucking honest with you. Here, on this fucking part, no matter what the fuck you would do, you would be losing here. This type, you know, because we have to be fucking honest. It's not always going to work. Most of the times it's going to work. But the other times it's not going to fucking work. So, because of this, fuck, better use the other one. So this one, you will have the short, this long, you will have the short loss, this long loss. You can't do fucking nothing about that. It is what it is. So these losses, only God could have saved you. You know, otherwise, I'm telling you, you would lose it either way, because there is no explanation, you know, of this one, except maybe if you would go for a lower high, descending pattern. But I'm trying to be fucking honest here, and I'm telling you, me one, I wouldn't fucking see it, you know. So I didn't saw it. So this one, you cannot be saved. But then, however, this part from here, I would actually, you know, here I actually got tricked, because there is a pattern more or less called the double bottom, and you can see in this case, but actually no, actually it was normal. Look at this. So this part here actually could have been evaded. Let me show you another trick now. So I'm going to use this one, although it's not a very good example, but this one is going to be a very good is going to be a better example. So if you notice that this part here, we have two lower lows which are more or less on the same direction, and at the same time you can see that if you would connect the higher highs, so something like this, but if you will take the bigger one, you can take the bigger one if you want. Fuck, I hate when the chart becomes so fucking messy with all of this. I believe it's okay with you. I'm going to remove everything for now. No, Elliott wave for a short time frame will not help. Elliott wave is much better when you use bigger time frames, not for this one. So in this case, I'm putting this one like this, and the other one is going to be this one. And this pattern from here is called the double bottom. It's one of my favorite. It's one of my favorite patterns. So, in this case, if you notice the double bottom, what it does, maybe better like this. You can see that we have the highs. Well, this one. You can see we have the highs. Then we have the middle point, and then we have another high. But then what happened here is the most crucial part, you know, because if it's not able to break the previous higher high that we have here, then that means we are going to have a reversal. But if it's going to break, like for example, I told you yesterday, like look for example this one here. So when it was, yeah, with 15 minutes. You remember yesterday when I made the analysis for crypto, and I told you, I did fucking said when it was 6. Yeah, you see, I told you this one here. It was 6 a.m. in the morning when I made the prediction. And I told you here, take this, like this, and take this like this. And I told you, if it's going to break the 1.51, green light. And it was... In a moment. So yeah, to fully start the bolt, we have to wait for a 1.5 T cross. It's what I said yesterday. And 1.5 T cross was exactly here. And I told you, if it's going to cross this part, then you can expect it's going to be an uptrend. You know? Okay. Okay, mate. Sorry. So fork this. How yeah, okay, sure. I use a fork. So you can see in this case, we broke it on the 1.5, and because we broke it, we can estimate that after that, we are going to have an uptrend. But yeah, it took a little bit of time, but it estimated that it's going to be an uptrend. And in this case here happened exactly the opposite. Once again, all these charts and all these patterns, they are not going to work always. So you have to be aware of that. But they are going to work more times than they are going not to work. So if you are going to be smart and take advantage of that, then you would be able to make more profits than you will normally make just by using a bot or something like that. So in this case, you can see the same example. We have a double bot and we have the higher highs connected. And you can see in this case, this candle was not able to overpass the previous high. And because it was not able to overpass and it started to go down, this one here could have indicated you a good selling point. So if you would do this, you can see that instead of using my strategy, you see my strategy gave you an exit at 4-5% after that. You see, so from here until here, yeah. So it gave you an exit, but you can see it was 5 hours later. Then what it would have been, if you would have took it by, yeah, I should put this in the chat, in the how it's called. So yeah, this is kind of one of the top, and for now, honestly, what I recommend you, like a homework, to say like this, and actually this is kind of what I use the mostly for myself, you don't have to focus on 100 of them. Focus on some of them. And in my case, the one that I enjoy the most is this one. It's double bottom and double top. This is what I like the most. The double bot and the double top, for me, they are kind of the easiest and the best charts. But for me, some others might prefer others. But in my case, I like these ones a lot. And overall, they bring me a lot of positive income. To say like this, more than what I lost with it. So yeah, let's go back here. So you can see, this is kind of one of the things that you can do. Once again, I repeat, this is when you have a side market, Yeah, lol. So this is what have been, when you have a side market. When we have an uptrend or a downtrend, that's another story. And when we will be in that moment, I will make an educational advanced stream regarding that stuff. Now, since I explain with you, those stuffs and those advanced lessons that I hope, you are going to start and include them, in your own portfolio and with your own strategies. Well, looks like slowly, again, we went for 2.5, we broke 2.5, but then after that, it looks like it started to recover. So yeah. Anyway, let's take a look right now. I'm going to remove this stuff here. Yeah. Now now I'm going to speak about look, for example, another double bottom. Look at this double, but it's not fully double bottom. But you can see we have this point, the double bot, and you can see now it crossed on top of it. So this one as well, right now might indicate the beginning of a new uptrend. This stuff here. And you can see this one here as well. It's not entirely, but you can see that this one could have indicated the beginning of a downtrend. So yeah. Again, look, beginning of an uptrend, the one that I told previously. So yeah, this is beginning of a downtrend with a double top. So yeah, you can see there are many opportunities, and you just have to use your time and look into them and analyze them more and more. But yeah, you can see at the same time the confirmation is telling us that we are in a long. 70% of all the tools here are telling that right now, it's a long. We have 17 moving averages, all of them telling to go long. The oscillators, we have 4, 5 neutral and 1, the neutral point on the pivots. But yeah, we can see that the summary is 22 against 10 to go long. So yeah, might be a good place. Now, I'm going to continue because I believe this was for the, this was for the advanced lesson. Now let's take a look, and I'm going to, both for the new clients and for all the clients that I have, let me explain to you what I did with the Dominus strategy. So, there we go. Give me a second. So in this case, the main factors that I put inside of it, I started to combine with this, it's Bollinger Bands, but in this case, I'm not using Bollinger. I'm actually using Kellner, but I put the name of Bollinger because they are more famous. It's more familiar, and you guys knows what it is. And overall, like here we would have the old one. Let me put the old one and the new one. So this one out, this one leave it here. So let's take a look at the new one, at the old one. So the main differences that we have, I'm going to remove for now the colors and everything, so because they are annoying. And after that I'll put them back, and I will explain in each one of them how they can be used. So let's go back from the entire, so let's take the entire data from 2019. So we can see in this case, I'm going to delete this one for now. So we can see new, old, and the new one has 72k, 312 trades, 46%, 4.6, 25.6 DD. Old one has 50.5k, 400 trades, 40.75 win rate, 4.6 profit, and a DD of 32. So this will be 2019, 2021. And now I'm going to do the same. It's going to be 220, 221. I'm going to show you the differences, and after that I will explain you the factors that I change and everything. So you can see in this case the old one has 24k, 208, 49.5, 4.7, and 17. Wait. And new one, but if I will optimize it with actually the setting, but doesn't matter, I will leave it like this for now. I don't want to. 22k, 880, 52.2, 4.6, and 9.75 DD. So you can see overall we kind of maintain the same profits, more or less, but the big difference are going to come in the number of trades and in the DD. And by using the ratings that I said previously, so by using an RSI trending calculation, an ADX trending calculation, and at the same time an ATR volatility for trend, I optimize it, and I decide I have like, so if I do like this, 320 divided by 400, so you can see that more or less I eliminate 25% of the trade. So by eliminating this 25%, 2025, because 180 divided by 2008, yeah, this one is only 15. But overall, by eliminating all of these, I fixed, some of these issues that we have in the side market. And the other continuation that I make, so like I said, these changes, they are mostly coming from from this one, from the BV that I have here. These are some settings that I have. I recommend in general to keep them like they are and don't touch them. And the other settings that I have, they are internally inside the logic. So the logic as well inside, it's change. Now, if you noticed, also one of the big stuff that I have right now is the DRA CMEA, and this one at the same time having the, let's take the alert for now off. So how should you use this one? I made it especially for the for the long for the sideways markets. So in this case, I believe from all the moving averages that I have touched so far, this is kind of the most accurate one. And if you want to find more details about it, you can go here in the trading, and if you go in the scripts, if you go in amazingly square, it's actually this moving average from here, and I love it. It's very, very powerful, and it's very, very powerful, and I like it a lot. And you can see, for example, in this case, it beat the buy and hold as well by a very, very big margin since 2017, for example, in case of ATH USDT. So just by using the moving average, you already have an amazing tool in your hand. So it's very, very powerful. You can see, yeah, we don't make so many trades in short, that's for sure, but overall for the long trend, it's an amazing tool. So anyway, with this one, mostly it's going to be much faster than all the calculations that we have, because remember, when we take the calculation, I'm not just looking at this moving average, I'm looking at multiple factors like the rating, candlestick patterns, its side market, and all these stuff. And because of this, of course, you are going to find some delay inside of it. But the way you can also use it, in this case, you have the natural entries, correct? So let's say, imagine, for example, you want to be kind of like a day trader, or you want to be more active trader than than the strategy itself is. You can see that we have these deviation channels, which are made, like I said, from the Kellner. And in this case, the way that I would recommend to use the deviation channel is when you have a cross of the candle, better said not cross, but a close of a candle is going to be above everything. So it's going to be above the red line. So this is going to be one of your entries. And the exit is going to be when you are going to have a close above everything. So like, for example, here or here. So you are aiming for very, very short trades. So like, for example, 2%, 3%. But at the same time, there are two factors that you have to take into account. First, that you are in a long trade. So a long trade has to be, so you will need a long signal previously, So it doesn't matter, for example, what moving average we have here, because of course it's going to be faster or slower. That's going to be the next option in order to use it. But now I'm speaking, about the channels, how you can use them. And the same, for example, imagine you are in a short. You can see right now we are in a short. And we still don't have a confirmation for long. And because we don't have a confirmation for long, the other way that you can do it, you can go when you have a cross above the deviation, like for example in this case, and of course you are going to exit as soon as you are going to cross down. So this is going to be another way that you can use for short. But once again, I repeat, you have to be aware and you have to be sure that you have a short signal previously. You don't want to do this when you have a long. And then again, look for another opportunity. Here, you see we have a long. Here, for example, it would happen, or here as well. In both of the situations, it can happen and you can enter. So let's say, for example, you will enter here. Here you would exit. You see, and again, another 2%. So you are going to aim for very, very short, for very short, how the fuck it's called? These trades. Yeah. And then again, look for example another one, this one here. So you see we are in a long trade, we have a short down signal, cross, sorry, and we enter here and we will exit here, 3%. And in general, I recommend to do a cap. You know, be careful. When don't get too greedy. You know, if you have multiple winnings or stuff like that, fuck it, fork it. So yeah, like I said previously. But look, for example, this one. If you are going to have a short and you are already going to exit from a trade like it happened here, then you don't want to enter another short. You know, so for example, this one, you would only enter if you either finish it when you didn't finish the trade. Like you see, for example, here we didn't finish the long trade. And here in this short, well, here in this short we finish it, but we finish in our direction. And if you would use a confirmation here, you will see that you will actually have another short entry. So yeah, maybe with the short it's a little bit more crazy, but yeah. And for long again, you can see we are in a long entry. And this one, for example, we would cross here down. Here it would be a loss. So in this case, we would have actually a double loss. It would be this one and this one. But then again, look, we have this one here, this long. You will enter in this long here, and you will exit here. So you'd have another win. And so this is going to be, like I'm telling you, this is one of the ways that you would be able to use it, using the channels. So this is going to be one of the ways. Now, for example, imagine this one here, although this one is risky, but you will have a short. This one, it was a short win, so you will enter here. It will be this one, and at the same time you will exit here. So you look for a 3% movement. But I am telling you, these ones, you know, they are risky trades, and you have to be very, very careful. And at the same time, you should use as well, you know. So, like for example, if you here, what you are going to calculate more or less from up there of all this. So maybe go 2 point the risk to 2 to 1. So you gain, for example, 1, but you lose 2. You know, so like for example, in this case it would be 2.5, so you would have I don't know, 2.55% stop loss. It's up to you in the end. You have to find those values. So you can see, for example, now we are in a long trade, and actually this one, it would have been a good long entry. And right now we are waiting for the new opportunity to happen, and I believe this candle is going to close on top of this. So this one, it would be a good entry for this opportunity which I'm telling you. Now the other wave that I have, because this one, it would be one of them, and I believe in my opinion it would be the best one. And honestly, at the same time, maybe you ask me, yeah, but why do you don't automate it? I try to do that, and honestly, I'm going to tell you, overall, you are going to be 60% in profit, but you are not going to make these profits like you have here. Why? Because when you will have a big trend, you know, you are going to lose the entire value of it, you know. So it's kind of like, you know, you see some movements and stuff like that inside of a trade, you can take it, and it's going to be, like I'm telling you, it's going to be profitable. But at the same time, you know, like let's say you have $100, 50, 60, 70 of them, you'll put it with your normal trade, and with the other one, maybe you will go with this one and look for these scalps. For people, you know, who are anxious to trade and want to always see some movements, I believe this one can serve the purpose. And then, of course, the other one, however, in general, I kind of don't recommend it so much, is to go by the moving average. So you see, for example, instead of waiting, like you will see here, you will have the other entry here as soon as it changes the color. So you will have the entry and you will exit here. And in general, aim for 1 or 2. Or this one as well, you would enter here and you will exit here, but this one will be a loss. You will enter here, no, this is a short. So yeah, you would enter here, you would exit, this would be a loss. Entry, exit, this would be a small profit. Now you would wait, for example, for a new green and you could enter. So using the middle, you know, using the middle point, you can also maybe go for it and use it as well. So yeah, that's kind of the biggest. Maybe I should put, if you guys want, I'm going to put into this one some alerts, like when you close down and when you cross above. Yeah, maybe I can do some alerts for that, you know. But honestly, it's going to interfere with the other logic. Yeah, it's actually going to interfere with your logic, so I may have to do it, you know, outside of it. So better for now, I'm actually going to keep it like this. In the future, maybe I'll automate it. But for now, you know, better to stick with it like it is. So yeah, I hope after today's lesson, and actually, since I already spoke to you about it, I'm going to make the update right now. So but no, actually I'm going to do it after, because I have to check some stuffs actually on it, and I will do it after. Yeah, I will make the update up because I want to see that, find the values. But yeah, speaking of which, I hope after today's lesson you will have a better idea, a better understanding in both how to make a better manual trading approach, and at the same time you know how to make use better of my tools. And of course, like I said, and I repeat, this one it would have been only for the Dominus, but at the same time you can use the one tool in order to have, you know, the big idea from it. You know, always is going to help you. Thank you, Overlord, appreciate it. So yeah, and don't forget, you know, this tool, for it, come into the channel of Telegram and you're going to find the link there, or in the Discord. Once again, if you want to find all the information about myself and my products and my groups and everything, you can go here in www.traderlife.com, and there you can find all the information. You know, you can see we have here, I have to speak with my developer to put here the Discord group as well. You know, unfortunately, I don't know why it is, but you can find the Discord group in my profile, in my signature, you know. But yeah. So yeah, I'm going to leave it here for now. Thank you all for watching. I enjoy you. I hope you enjoy it, and I hope you learn some nice, interesting stuff. And yeah, wish you good luck with the next trades. Let's see how the market continues, because if it's going like this, maybe I will make a scalper list, but maybe right now it's too late for scalping, honestly. It might be a reversal, so actually maybe not. But yeah, we will see. Thank you and good luck to you all. Bye bye.